Hi, I'm Roopali. Let's talk VAT. Hello everyone, I'm Roopali and today I will take you on a step-to-step guide on how to file a VAT return in Oman. VAT return is an official document to be submitted by a taxable person. All the VAT returns shall be filed online using the portal tms.taxoman.gov.om. All such returns need to be filed within 30 days following the tax period. Let's get started. This is how your online portal would look like. You need to sign in using the login credentials and a flowchart would appear. This flowchart will give you the various e-services options provided on the portal. So to get started, you click on the sequence 2 which talks about the taxpayer list. Two rows would appear. One is for filing the income tax return and the other one is for filing the VAT return. So click on the tab Start e-service against the TIN number of the taxable person. A flowchart would reappear again and this flowchart will show you different options. You click on the sequence number 3 which talks about the tax returns. Then you click on the Add New Return. Once you click on that, the portal would request you for the tax year and the tax period and a new VAT return application form will be opened. This application form specifically has different sections. The first section majorly covers upon the company information. And then further, when you scroll down, the VAT return is split into two parts. One is the sales and the other part outputs, that is the tax which you have to pay to the authorities. And the second part is for the purchases and other inputs for which you have to claim back the VAT from the tax authorities. Now let's get into the VAT filing process. The first part is majorly boxes 1A to 1F which talks about the supplies made by a taxable person. So let's get started from box 1A. What is this box? Over here you need to record all the taxable supplies made by a person including the deemed supplies. So you insert the taxable value and the VAT is auto-calculated. Moving next to the zero-rated supplies. Box 1B you have to state the zero-rated supplies made by a taxable person defined under the Article 51 of the Oman law and it will not include the export of goods and services. What are these zero-rated supplies? These are nothing but the specific goods and services mentioned under Article 51 of the law, which is the supply of certain food items, international transportation, and so on. Coming next to the exempt supplies. Box 1C talks about the exempt supplies that a taxable person is making. Over here, you have to report all the supplies made under the Article 47 of the Oman law and it should not cover your out-of-scope supplies. Now coming to the next boxes of 1D and 1E. These are basically the supplies made to the GCC countries. Since the GCC rules are not yet applied, these boxes are not yet activated. So we come to the next, which is 1F, box 1F. It talks about the profit margin scheme. So whatever supplies you have made under the profit margin scheme, you report here. Again, you will report only the value and the VAT shall be auto-calculated. Box 2 talks about the purchases made from the GCC countries and the other countries. What are these purchases made? Are these goods or services? Let me be clear here. It includes the purchases of services from the GCC countries to be covered under box 2A, which is not yet activated since the GCC rules are not applied yet. And box 2B talks about the purchase of services from the countries other than just GCC countries. Now a very important question. What if any taxable person in Oman is importing the services from UAE? Where will that person report such supplies? It cannot be reported under box 2A because it is not yet activated, and box 2B specifically talks about purchases made other than the GCC countries. But let me be clear, practically, and what we have been following worldwide right now over here is that we will report the purchases made from UAE also under box 2B. Coming next to the box 3. Box 3 talks about the reporting for the exports. All the exports made by a taxable person, whether be of goods or services, shall be reported here. There is no VAT attached to it, so you report only the value about it. Next comes box 4. Box 4 is majorly for the import of goods. It is split into the two parts. One is box 4A and the other is box 4B. 4A is particularly for the import of goods wherein the VAT payment is postponed. That is, when you import the goods from the customs, you do not make the VAT payment. However, once you put the value of the imports made, VAT is auto-populated. So we cannot really do anything out here, but we will reverse it later on. Coming to the next box, which is box 4B. Over here, this includes all the imports of goods made at the customs and where the VAT has been paid. Over here, we just mentioned the import value and we do not mention the VAT over here because we have paid the VAT on this value and we will recover it in further boxes. Further you scroll down, box 5 will appear. It will have two boxes again, 5A and 5B. 5A will auto calculate your VAT due that you have pre-filled in the prior boxes, and 5B is for the adjustment to the VAT to be made. Now what are these adjustments? These adjustments include if you have raised a tax credit note for the supplies that you made in the prior period, then you will report the VAT due on such adjustments under this box. And if it pertains to the current tax period, then it has to be adjusted in box 1A. For the second adjustment out here is when you have a bad debt and 12 months have passed and no consideration has been received. So the VAT amount due on such bad debt shall also be reported here. As we move down, a second section of the VAT return will appear which talks about the purchases and other expenses incurred. So this box 6 is particularly pertaining to the purchases made and the input tax recovery on such purchases. So let's get started. Box 6A. Box 6A, you have to report the purchases made, whether it be an exempt purchase, a zero rated purchase, or a purchase related to the blocked input, and of course the standard rated purchase on which the input tax is recoverable. Kindly note, you do not have to report the out of scope purchases over here. So once you report the taxable value of the purchases made, which would be a mix of zero rated, exempt, blocked, you cannot recover the entire VAT on this value. So you will record only the recoverable VAT in the column 2 against these purchases. Next, box 6B. Box 6B talks about the import of goods. So all the imports that you have reported under boxes 4A and 4B, whether you have postponed the VAT or you have paid the VAT, all the imports of goods needs to be reported here, and 5% VAT shall also be recorded on both the imports, like the total of boxes 4A and 4B and the VAT on this value reported. Next comes box 6C, wherein you report only the VAT on the acquisition of fixed assets. Now what are these fixed assets? There is no amount that has been defined to qualify as a fixed asset. So any purchase of fixed asset which is for long-term use and is capitalized in the books of accounts has to be recorded here. So you will record only the VAT amount on such purchase of fixed assets in this box. Coming next to the box 6D. Box 6D talks about the adjustment to the input VAT. Again, it is only the adjustment, VAT adjustment amount that you have to record here, and it is recorded in negative. So what it includes? It includes the tax credit notes that you have received from the supplier on which you have claimed the input tax credit in the prior tax period. If it pertains to the current tax period, then it will fall in box 6A. And if there's any bad debts which have been written off and 12 months have been passed and the payment has not been made, then again it will be recorded here as a negative adjustment. Now we come to the next section. What is the section of the VAT return? It is a tax liability calculation. Box 7, and a very important one. All these figures are auto-calculated. Box 7A talks about the total VAT due to the tax authorities, that is all the sales part, box 1 to 5. And box 7B talks about the total VAT to be claimed from the tax authority, which is your box 6. And the adjustment is shown a plus or a minus, whether you are in a payable position or a refundable position will be reported as a net VAT due in your box 7C. We request you to kindly revisit these figures before submitting the VAT returns. Once you're confident, you declare it as okay, and then you can proceed with the filing of the VAT return. Thank you for watching this video. Stay tuned to learn more about VAT in Oman.